Stocks themselves. Let's talk about some of these names. You asked for drone, and I'm going to come back to Ambarella as my favorite drone play. Ambarella, again, makes the chipsets that most every drone uses some sort of recording device, and this day and age, that's probably an HD recording device, and if it's an HD recording device, Ambarella probably has a name somewhere on that piece of equipment. SanDisk is another one I would look at as a drone play. It's not quite as obvious, but you've got to have a lot of storage for HD video. You've got to have a lot of storage for the data that drones, even the drones that aren't going to be recording data, are going to need to have a lot of storage on them, even if it's being broadcast. Devices themselves, storage isn't going away. And furthermore, all that stuff that is going to be stored in the cloud and on servers are moving towards flash technology storage devices, which SanDisk is the purest play on flash storage. And finally, Splunk. It's a big data company is the easiest way to explain that one, and in the same way I just got through explaining that you're going to have so much data to store. Well, you're going to have so much data that you're going to have to analyze, you're going to have to manipulate, you're going to have to work through that data. IBM, by far the best play on big data, except they're idiots and I don't know what they're doing and they're not growing that business, so I own Splunk instead. Couple other trends that I think are very important, and I don't know exactly that we've got a Facebook play for them, but I want to mention the messaging revolution. Talk about things that you're an expert in, and this is something that I've been spending 10 years on, working and studying and analyzing social networks and messaging. I do think we're living through a communications revolution. You all know that. You're sitting here getting pictures. I just got a picture from my wife of my daughter being held by my father on my watch as I was talking. You might see me smile a little bit. Yeah, so I can email, I can text, I can tweet, I can Facebook message, I can WhatsApp it. I personally have my own future app I mentioned earlier. You can send messages into the future, or real time. You can send them just like any other messaging app, and it gets delivered instantly. We're going to communicate more and more. It seems crazy, but we're all going to have more and more access to each other. We're going to have the ability to talk to celebrities easier. You're going to have the ability to even just track them. I think messaging and communications is a huge, it's in the same way that Uber was able to find something that was so inefficient and so uneconomical and manipulated in bad ways and then create value out of it. The communications industry is still very controlled by the telecom companies, the cable companies, the ISPs, and apps themselves are going to displace that power. You're going to be able to communicate ever easier, whether it's Periscope streaming, whether it's future messages sent into the future, or whether it's just a WhatsApp message sent to your friend out in China for free. Stuff's happening. You FaceTime. Still, I mean, how many of you guys actually FaceTime? Almost all of you. How many of you actually FaceTime more than you call? More than you email? One. And that's a pendulum shifting that you're going to be video communicating, FaceTiming, or whatever Skyping, however you want to talk about it, more and more. That's how we engage. Typing isn't the normal thing. Tweeting isn't normal. Looking people in the eyes, even over 1,000,000 miles away, being zapped to you over broadband networks. That's real. That's how the communications revolution is going.
Well, it's cheaper.
And it's cheaper.
It doesn't cost anything.
You download the Future app and you call people, you message them, you text them, and it costs you nothing. You could literally do it all from a Wi-Fi iPod. You don't even need an LTE broadband connection these days. They're in another spot right there. How many of you guys get crazy because you hit your bandwidth capacity? Or you get 10 gig or whatever, 1 gig, I don't remember how much I pay for, but I've got a company that's on it, and every month I end up being charged. We increase the capacity. I think we're at the maximum capacity you could possibly be for like 8 people, and every month I still run out because I stream too much Netflix on my phone. When I've got a Jeep too that I built the thing. I got my iPad mini actually it's my dashboard console, and I watched the entire NCAA tournament with my dad driving back and forth from Albuquerque to Ruidoso, and that's how I ended up running out of capacity. But there's a business opportunity. Anywhere that you're running into capacity constraints, if you can't get what you want, if you can't get a cab quickly, there's a business that could be worth billions, hundreds of billions of dollars. Uber was there. If you can't get as much bandwidth streaming as you want, someone's going to get it to you. And if you can find that company and believe in the management, and they are public, and you can get in them early, you're going to make a lot of money. You're going to own the next Facebook, Google, or Apple, or Netflix. I had to bring up the Netflix. It's been bugging. I don't even know. Just last night, I was losing sleep because I was watching Netflix, and I was like, how did I not buy this thing?
How are you going to monetize that if it's free?
Same way, it's a lottery ticket. Apps themselves, in general, are a lottery ticket. You're either going to lose your entire shirt, or you're going to get 100 times return, or maybe a 5 times return. But I need 1 million people on. We released this 3 weeks ago. We've had almost 10,000 people download the app in 3 weeks. No marketing, just all viral, word of mouth, me publishing, mentioning it in Scudify and whatnot. We've had nearly 150,000 messages sent on that app already. We need 100 times that both. We need not 5,000 people, we need 5 million, we need 50 million, we need 500 million people. It becomes hugely monetizable when you get into the millions of people. If you don't hit into millions, or even tens of millions, you're taking a risk. I mean, so to go back to your question, there's lots of ways to monetize it if we get the traffic. If we can get the growth, if we can get the people on there, in the same way Mark Zuckerberg's going to monetize WhatsApp, I'm going to monetize the heck out of this thing on my own. More to the point, I mean, this is an app revolution, and apps are being bought every day. Twitter bought Periscope, Twitter bought another company, Facebook bought WhatsApp, Facebook bought another company, Google's buying an app company, Yelp's buying an app company, Yahoo needs to be buying app companies. There's a lot of people that need Scudify. There's a lot of people, a lot of companies out there that need a revolutionary messaging app. And, the idea is we either grow that business to $1 billion business and take it public someday, or we sell it to Yahoo for tens of millions or something along the way, or hundreds of millions, or it just depends on where the valuation is at the time we get a deal going. We've had people come kick the tires. We've had a couple of publicly traded companies come look at us, and these things take time. It's always a lottery ticket. Even if they're interested, they're looking at 20 other companies too. So it could be very exciting for me and my shareholders if something like that works out. But it's a hard job, I feel, Scott, the guy that you saw up here with me before I started talking, I've been whining to him not whining, but I'm stressed about the company, until you've got millions of people, you better be stressed. So we're getting there. Scudify itself is actually cash flow positive, not quite cash flow positive, but we're getting closer. We actually have a business model for this one. An app, a messaging app, what are you going to charge people? No, like you just said, it's got to be free. We got to have a huge presence on that one and either sell it or figure out how to monetize it when there's millions. Scudify is different because it's such a vertical, and by the way, it's under the same umbrella as Future, but you guys will buy stuff on Scudify. You'll pay for research. We generate tens of thousands of dollars in sales already on Scudify from people purchasing this guy's report or buying my latest stock idea for $15. So, you've got a business model on Scudify. It's actually monetizable. Most apps, I think, you're either lottery ticket, huge home run, or you struggle. That was off topic, but it's sort of on topic because it's all part of this revolution that we've got to be aware of and we've got to live through together. Yes?
Yeah, you kind of implying you're a buy and hold person. go find these great things and hold them and try not to get nervous when things go.
Correct, correct. You also heard me mention I never had the guts to buy Netflix, and I also panicked myself out of Amazon at some time recently. And in general, I mean, why would I sell Apple now? I mean, I've got the tax gains alone would be huge, and then B, I mean, the company's kicking off $100 billion of cash flow next year. I mean, trade for $700 billion. I can't find very many growth companies that trade at 7 times cash flow.
What's your yield now? At your
Oh,
price?
shoot, they're paying me more per quarter than I bought the
Then you
stock at.
invested. Yeah.
Why would I sell that? Why would I sell that? So, yes, I'd love to own Facebook until Mark Zuckerberg dies or I die or something. I mean, I will sell for various reasons. I do suggest taking profits. I don't own every single share of Apple that I owned at $1. I've sold some at 2, bought some more back at 3, sold some at 6, bought it back at 5, sold some at 9, sold again at 12, bought it back at 9. I have a core position, no pun intended, Apple core. I have a core position in Apple that I've had for 13 years or 12 years or whatever it's been, and you know, I would never sell more than 10 or 20% of it.
I think
Yes.
the thing you talk about is tranche buying. You talk about buying yourself.
Let's talk tranches, and so that's the great thinking. We're starting to bump up on time here, and I want to get the last everything I can in here. Actually, I guess I'm not. It's only 5:20. We're till 6:15.
Yeah.
Okay, good. Tranche buying is one of the things I suggest doing. Tranche selling too, and I'm saying TRANCHE, tranche. You are not buying your whole position at once. You're not selling your whole position at once. Give yourself a little room. Don't rush into it. We're not day trading here. We're finding revolutions. So I'm going to buy, like for example, my most recent purchase is, or one of my most recent purchases, let's just look at them. Where is that? Latest positions. Of course, the last one I click on. Splunk is a good example. I just started buying that maybe a month ago, 6 weeks ago. And I'm not rushing into it. You see it down there at the bottom of the list, largest to smallest. Oh, all right, sure. All right, so my primary stock exposure from largest to smallest, when I published this a month ago, and it hasn't changed very much, if at all, since then. Apple is my largest, then Facebook, then Google, then Ambarella, then Sony, Synaptics.
Sony?
Make a note, go buy Sony right now. That was the reaction I got when I bought Apple. I'm not joking. When I bought Apple in March 2003, I must have had 50 emails and exclamations from friends at a random dinner. I'd be like, I bought Apple. Apple? What? Why? The company's dead. It's never going anywhere. It's not going to grow. Sony, I'll come back to it in a second. Sony, Synaptics, First Solar, Whole Foods.
Oh, so you got a little floor.
Sure, sorry. Gosh, you guys are picky. Pay a little bit of money and now I got keep. Synaptics, First Solar.
What's the get welfare?
Oh, your tax incentive? Yeah, we'll come back to that in a minute. There's not a company out, you can't buy a publicly traded company that's not on welfare today. None of them are paying their fair share of taxes. And if you're not paying your fair share of taxes, I'm subsidizing you, which means I'm sending you welfare. So let's be clear, you can't buy a publicly traded company today that's not on welfare. First Solar, Whole Foods, Twitter, Intel, SanDisk, Lindsay, LNN is the symbol for that one. That's a water infrastructure company. Best way to play the marijuana revolution. Don't you dare go buy any marijuana penny stocks or microcaps, okay?
What was that again? Why not?
LNN was the stock symbol. Lindsay. Let me highlight it. It's here. It's a water infrastructure company. So you want to figure out how to water your plants or your marijuana crops, I guess. Because I don't think plant. I mean, we're talking about industrial business. We're talking, I'm not talking about the guy smoking a doobie in his house. We're talking about medical and mainstream marijuana use going out into the mainstream legalized everything. If you truly believe that's going to happen, I do. I think over the next 5 or 10 years, there is a huge marijuana revolution.
Yes.
No penny stocks, no microcaps, not any symbols like hemp, MJNA, CBDS. These are scams. We run from those companies. I've been talking about all. If you guys remember me talking a year ago about this same spiel, you can actually go look at every single one of those stocks I've ever mentioned as a marijuana penny stock scam. Every one, without exception, is down 90% in the last year. And you guys don't go buy them now, because they'll be down 90% this time next year. Don't touch microcaps, don't touch penny stocks. You'll never find a Facebook, Google, or Apple as a penny stock. Apple was at $14 a share when I bought it, trading below the net cash per share it had. Still, we're talking about billions of dollars. Google was worth tens of billions of dollars when it came public, now hundreds of billions. It didn't start as a penny stock. You'll hear these penny stock promoters all the time, well, Microsoft was once a penny stock. No, it was not. It never was a penny stock. It is split 5,000 million jillion times, and now it looks like your cost basis, it could have been 1 cent back in 1988. But that's not actually what the stock was trading at. It was at $50. So run from penny stocks, run from microcaps. The average retail investor has absolutely no business ever touching a microcap or penny stock. You want to go bet on a $50 million, $100 million company? You go find a private. You go find a Cody Willard who's got a company he's raising money for. That's where you go. You go find someone private. Don't go buy a publicly traded microcap or penny stock, marijuana related or any other. I was just 2 months ago, for months, these guys kept calling me saying, Cody, we can make a lot of money together. I will pay you a lot of money. I want to bring you on to my staff. I want you to be our writer, our in-house analyst or something. And none of it made any sense. What's your business model? What? And I find these guys are in Vancouver. So I finally was like, all right, I'm going to fly out to Vancouver next week, just go see what the deal is. So I hop on a plane, fly out to Vancouver, get to the offices. We're in a high-rise, beautiful building, downtown Vancouver, and I go in, I push open that door of their offices, and the first thing I see is, I don't even remember, what was the stock symbol? It doesn't matter what the stock symbol was, but it was hair growth rejuvenation company. And at the bottom, the stock price went up by 19 cents. Oh no, oh no. So I sit down with these guys, and before they could even say a word, I said, you should have done one thing before you ever Googled Cody Willard penny stocks, because I have written hundreds of articles explaining that you guys, you sitting in this room across from me right now, need to go to jail. This is a scam. I am not going to partake in it. You're not going to pay me hundreds of thousands of dollars to get my subscribers who trust me and trust in what I'm saying to buy your crappy hair growth penny stock that you want to sell your shares in. By the time I had gotten home, those guys, I will say, they were so gracious. I wasn't quite that aggressive, but I was pretty, it's like, this is BS, dude. I'm not doing it. Like, what's the deal here? You guys, do you not know? You know how many veterans have come back from Iraq and bought your crappy stock with that money that they barely came home with? And you want me to partake in that? Do you know how many veterans? By the way, anybody serving in the military can get trainwithcody.com. All of my services 100% for free as long as you're an active member. I have no interest in taking money from anybody who's serving my country and trying to protect me, even if I don't agree with the wars we're going at. All that stuff's a different topic. You're serving my country, I will hook you up with free subscription for life as long as you're active in the military. Yeah, right? So, seriously, veterans in here, I know there's got to be some. Thank you. Thank you for fighting for our country. Thank you for fighting for our freedoms. Thank you for enabling me to stand up here and talk about this stuff. That's what penny stocks are. That's what the average penny stock, the average microcap, the bulletin boards, These guys laid out the business model for me. They took a company that used to be a DVD recording company and turned it into a hair growth follicle company, did a reverse merger, and took the company into a reverse merger. Just means you actually buy a shell of a stock that's trading on the bulletin board or the publicly traded stock. You buy the company that owns that stock, and then you put your shell, your company, inside of it, and now you get to change the symbol from DVD-R to hemp, or whatever you're hot. I guess bald, B-A-L-D or something.
Okay, LNN was the last one.
Say that again?
LNN was the last one you
Oh,
talked
you want me back off the? You want me off the
You're back on the subject.
Fine. F5. FFIV is the stock symbol. IV. F5. Fred, Irene. Wait,
Yeah.
Fred, Irene, Victor. FFIV. Splunk. Palo Alto Networks. PANW is the symbol. And by far my smallest position right now is Yandex, Russian internet play. Stock, you can actually pull up, I wrote an article, I'm not going to pull it up, but you can actually go back and pull up a chart. Did I get them all? We cool?
No?
Yeah.
No.
Yandex,
No, the one, shorts.
shorts. Underneath that, I start talking about my shorts. I'm not going into shorts today, we're finding longs. So, Yandex is my last, by far, and it's smaller than any short I've got too. It's just a lottery ticket play. The stock has fallen from $50 to $15, exactly parallel in exact movements with, exact correlation with oil. As you pull up Yandex and pull up a chart of oil, and they move almost identically, except Yandex is down 75% and oil's only down 50%. And Yandex is getting crushed because of the ruble currency conversions. The quarter wasn't very good, but it's a huge growth company. It might not be 100% compound annual growth rate, but it's the Google of Russia, and I'm willing to ride it out for a few months on a lottery ticket kind of bet. Those three down at the bottom, besides Yandex, right above Yandex, Palo Alto Networks, Splunk, and F5. I consider those a basket of security stocks. There's another revolution that you want to get in front of, security. The hackers are out of control. I've had 2 cards from 2 major banks compromised in the last 2 weeks. I thought that stuff was over. I haven't read anything about Target's cards being compromised lately. Somehow, I haven't done anything random, but my cards are getting compromised. I'm seeing a lot of nodding going on out there. That stuff's real, and that stuff has to be protected. And Chase is, Wells Fargo, you name it, every bank on the planet is allocating, they're doubling their security budget this year. They're going to double it again next year. They'll double it again the next year. You have to protect the assets, you have to protect the data, you have to protect the underlying stuff that's being stored, or your customers, you lose your customers' money for one thing, and there's only so much money that the Republican-Democrat regime can send to Jamie Dimon at JP Morgan to pay you back.
I think it is funny when you get a guy that's over 70 saying, "Sir, we just charged a surfboard in Australia." Did you buy that? I'm in you. Real story. There's some guy took that number, charged a surfboard in
Charged?
Australia.
Do it. I didn't understand. He charged.
To my Visa card.
Oh, okay, yes, exactly. So you buy a surfboard in Australia, you rent a surfboard in Australia, and your card gets hacked.
I mean, it's incredible.
And that's just it. That stuff has to change. I don't know why I've got 6 charges in Brazil.
Visa caught that as that apparently, if he had done it in Florida, probably would get through it, but it was Australia.
And that's what actually, I think the only reason that they caught some of my own charges, because I've got some stuff going on in Brazil, and I'm like, I haven't been to Brazil lately. I don't think I've shopped on Brazil.com either. Security is going to be huge. We've got to protect that stuff, and not just the banks, but every major corporation on the planet is doubling, tripling, ramping up the spending they're doing, trying to protect their networks. That's a huge growth. These are my...
Have you looked at FireEye?
Yes, I spent a lot of time on FireEye. I even owned it for a little while.
See when you go.
CyberArk also, I don't like investing in Israeli companies. I don't like investing overseas. Yandex is a rare, temporary position that I'll go overseas on. It's hard enough trusting Steve Jobs at Apple, who steals from me, and the guys over at CyberArk in Israel, I don't even know their laws. Don't know who they are, don't know how to meet them, don't know how to get those laws enforced. So, no. FireEye, the man, I just can't, I can't get my arms around management. Can't bring myself to like them. I can't, so no.
What do you think about the new CEO at Microsoft? That seems to be moving. He seems to be a bit of a visionary.
Well, he's better than Ballmer, I mean.
Well, yeah, but who wasn't? The doorstop was better than.
Yeah, I mean, seriously, you tell me what's the revolutionary trend that he's got Microsoft in front of? Maybe cloud?
Yeah.
Is that, are we gonna bet that Microsoft?
He's certainly changed the way he's getting paid for.
But that's not, I wanna know revolution is
Yeah.
changing. What's the revolution of society that he's getting in front of with Microsoft? With Android and Google, I know.
Yeah.
With Apple and iPhone, I know. The Apple Watch, I know. Facebook's platforms, I get. I got nothing. These guys, and so what, Microsoft's currently trading at maybe 14 times earnings. And so what, is cloud going to replace the desktop business that they're losing and grow enough to keep that market cap at 14 times earnings? I don't like Microsoft. I don't see a reason to own it. I've owned it in the past. It was my biggest position actually, 2007, when the stock was like at 18 and I caught it to 30 and I had a great year, but. Did I see another question?
Did you say?
Did you want to ask one? Someone who hasn't asked one yet? Yes, he's been asking for a while. Yes.
I have a couple of names and tell me why you like them. Why do you like Sony?
Yes.
What about Sony?
Anybody in here own Google? Do any of you own Google? Presently. Do any of you own Facebook? Any of you own Apple? Do any of you own Sony? Two. I'm actually surprised.
I own Sony because of Columbia Pictures.
Okay.
Because of the content, because I used to work at Columbia.
Which
Pictures.
one?
Content is king. Remember me talking about that earlier. What does Sony own? The largest library of television and movies that anyone on the planet owns. What does Netflix need? What does Amazon need? What does Microsoft need? What does Google need? What does Apple need? Who are the best funded companies on this planet? Apple, Google, Facebook, Amazon, Netflix. Who owns everything that Netflix, Amazon, Apple needs to stream?
Sony.
Fine.
Not only that, but I actually think Sony could end up being the Samsung of wearables. They've been investing quietly behind the scenes on wearables technology. Sony also is supplying the iPhone and other companies with some imaging and some of the camera sensors that go in and make this thing work. And they've got a lot of demand for that. That's a big growth business for them. Sony is in Japan, so that is a mark against it, not here in the United States. But when I bought it, this company had a $20 billion market cap. Netflix's market cap right now, 40 billion?
How much?
40? You think Netflix should be worth twice Sony? Maybe. I mean, Netflix is going to grow. But I think, just like GoPro needs Ambarella components, if they're going to grow, the better way to invest in GoPro's growth is Ambarella. Well, I miss the Netflix 100 times move in the last 10 years as we've drilled over and over. Thank you very much for reminding me. But Sony, I bought it at 18, 19, 17 maybe, got scaled into more at 16, which is actually what we wanted to get to here. Tranche buying. Let's use Sony as the best example, okay? Going back to tranche buying and trying to find that, invest slowly and surely into the next Google, Apple, or Facebook. You don't want to buy your entire position all at once. You're not looking to make 20% tomorrow. You're not looking to even for a quick day trade or to hold it till the end of this year. if you're going to find another Facebook, Apple, and Amazon, Google, Netflix, you're talking about 5-year, 10-year, 15, 20, or forever holding periods. So you need to adapt your buying and your selling approach, your strategies and tactics for that. What I do is Sony. It was at $19 when I first started buying it. Why 19? Well, I don't know. It was cheap enough. Finally, it was there. I was like, I'm starting. Started buying at 19. It fell to 18. I bought a little more. And when I start buying it, I'm picturing, you know what? I want to own 5,000 shares of this. So I'll start with 1,000. Bought 1,000 at 19. I'm making round numbers up here for you. Dropped to 18. I buy another 1,000. Dropped to 17. I bought another 1,000. Dropped to 16. I didn't catch the bottom. Bounced back up to 17. Got to 18. I bought another 1,000. Got to 20. I bought 1,000. Now I've got my 5,000 shares. My overall cost basis, maybe $18 a share, $18.50. I still own, well, okay, so then I held all of that for the last 9 months. Stock went up to 32 recently. My subscribers at tradingwithcody.com got an alert. I'm selling 10% of my Sony. So I sold 500. In that case, it would be 500 out of 5,000 shares if that's what you owned. Take that off the table. I got a 60% gain or 70% gain in 9 months. Let's take a little off the table. Well, Sony dropped back to 29 after I sold it. I didn't buy any more though. If it gets to 25 and I still like it, I'll buy that 500 shares back. That's what we're talking about when we're tranche buying and tranche selling. You do a little bit at a time. Basically, typically when I buy 20 to maybe 1/5 to 1/3 of a full position, depending on how aggressive. And then it'll at least be another day, maybe 2 or 3 days before I'll buy another 20 or 30%. And then I sort of let the price and time and patience and art versus science carry me from there. And at some point I try to sneak in when stock's getting crushed and people hate it, like Twitter right now maybe, or Google right now. Twitter's another example. I didn't buy it on its IPO, as I mentioned. I thought it was disgusting that the stock popped 50%, and I was very bearish on it. Stock went all the way to 70, still wasn't interested. Came back down to 30. I started getting interested. I bought it around 32, I think. Bought a little more around 31, bought some more around 34. Got above 40, I sold 10, 20%. It's now back down to 37. I'm not quite buying it yet, but you saw it down there. It's sort of near the bottom of my portfolio. I'll be buying some more Twitter at some point in the next week, month, and I'll probably buy 1/3 of a position. Yes?
Just a random question. What do you think is the time to buy? Right now, the market is really high. So,
Timing.
Yeah.
So do you want to time markets? And in general, no, but at extremes, yes. And so I launched a hedge fund in October 2002. The NASDAQ was down 75% straight line from the popping of that bubble. Why did it bottom in October 2002? Because I launched no, I'm just kidding. Who knows? I mean, I got lucky. The market was down. It started turning back in November. The next 5 years, I wrote a bull market in technology with a technology hedge fund. It's great. I looked like a genius. I bought Apple in 2000 because it was at $1 a share. You know, like, that's great. In 2007, I closed my hedge fund. I got out of it and went to TV, and I told people at the time and wrote about it at the time, I think real estate's crises. I think we're about to undergo a major economic crash. That was what I thought in 2007. Again, I didn't know that it would be the next year, but I thought in the next 2 to 3 years, your risk reward was horrible for being in the stock market aggressively, at least. And then in 2010, when I got out of TV and the markets, Dow was probably at 8 or 9, probably 9,000, almost 10,000 when I got out. And it's a no-brainer. I mean, I want to get in stocks again. You can get Apple at, at the time it was probably 50 or 40. And it's tripled since then.
do you wait right now to buy?
I don't think you have to make it an either-or thing. I think you want to try to have your cake and eat it too. You're worried about the markets? Well, make sure you've got some cash on the sidelines. Whether that's 10% or 50%, only you can answer. Whether you start buying with 5% of your money now or 20% of your money now, because you do want to get a little exposure to the market. That only you can decide that. I certainly don't think now's the time to be aggressively long. I was aggressively, my subscribers know, I was aggressive. I owned call options, long-dated call options, leaps, I was 110% margined. I was everything I could buy in 2010. By 2011, I was back down, less aggressive. By 2012, caught my breath a little bit. By 2015, I bet I'm 70% as invested as I was in 2012, 2011. So that doesn't stop me from buying Iconics this week. That stock, it wasn't on the list, by the way. Like I said, that list I showed was several weeks old. Last week, Tuesday, yesterday? Yesterday, I started buying Iconics, ICON. And what's the stock symbol? Another content is king, beaten down Sony-like company. I will get bearish at some point. I hope I'm smart enough to catch the next top like I did in 2007. I don't count on me doing that, and I doubt I would ever, like I don't run a hedge fund, so I don't have anything to close. I don't think I'll ever go to 100% cash or something, but I certainly will get down to 50% invested at some point. If the Dow goes to 25,000 tomorrow, I will be 20% invested by next week, because I'm going to trim out into that strength.
Sure.
So in the grand scheme of things, I do think there are some, most people say don't even try to time the market. I think they're wrong. I think you should try to time the market a little bit, but not extreme. Don't bet big on either direction. When things are down, buy more. When things are up, buy less. Be chill. Yes?
I see you mentioned fire. Can you say a few words about that? And
Yeah,
also-
no, I did earlier.
also Mobileye.
Okay, I'll come back to Mobileye. FireEye, I don't like the management. Great business, great company, great sector. I just couldn't get my arms around management. Mobileye, I don't know enough about, but if I recall, it's another Israeli company. And when I go, first thing I look at, one of the very first things I look at on any stock is where is it located, where's its headquarters. And Israel, if it's based in Israel, it comes off my radar immediately. I'm not buying an Israeli stock maybe for a trade, or a Chinese stock, or a Russian stock, or a Mexican stock. I'm buying American stocks, United States stocks. Yes, new questioner.
What do you think of future of 3D printing?
Oh boy. All right. Well, that's something I think another huge revolution in front of us. Someone was talking about the materials revolution. Why wouldn't 3D printing help drive the materials revolution? The stocks are down now. I actually owned, I caught a double on DDD, 3D printing, and I caught not quite a double, but a pretty good gain on SSYS. I think SSYS Stratasys is by far the best company in the industry. I don't think any of the companies are going to do very well for the next year. I don't know that the existing batch of publicly traded 3D printing stocks are good. I do think in 20 years, people who invested properly for 3D printing are going to have 100% gains on some of their stocks. But again, if you're a materials expert, that's somewhere you sure as heck better be the guy who knows everything where that industry's going, and 3D printing to be part of it. I'm not looking to buy 3D printing stocks anytime soon again. I had caught a trade on, and I got out, frankly, because I saw that sector starting to turn. I saw the market starting to discount the turn, and I took my chips and went home. Yes? You? Yes, sir.
The underlying architecture for Bitcoin is blockchain, and it has a value of its own, just to use that for documents, sending, privacy, and things like that.
Yes.
And I understand there's a few companies, I don't even know the name, but they're starting to get built to do that with the blockchain.
That's exciting. I do think digital currency at some point in my lifetime becomes a much bigger factor. I think the Republican Democrat regime and those corporate welfare loving dudes are going to lose their ability to bail out banks and control the value of the dollar, and the reserve currency of the world does not remain the US dollar in 20 or 30 years. I have no idea who would be doing what. I don't know enough about blockchain personally that I would feel comfortable investing this early in that cycle. Yes, I will be an investor in the de facto standard digital currency stock, the best pure play digital currency stock. If you want to find it, you come subscribe to tradingwithcody.com, and somewhere in the next 5 years, we'll be in one. Yeah, are you guys okay with the format, answering these questions? Everybody comfortable with that? Do you want me to get back on topic, anything? Did I see the face?
Talk about.
What was that?
What more were you going to talk about?
Well, that's a question. I'm not willing to answer that one. That's pretty good, huh? I got a laugh out of that
What's your
one.
fifth trend?
Yep, messaging.
Big data, big data, big data. It's messaging and big data would be the fifth.
What's the symbol?
Oh, these are trends, not stocks.
Fourth.
So, can you expound on?
On big data, in the same way that security, in the same way that storage of these things has to be addressed, the amount of data at Twitter alone is incredible. The real-time analysis and breakdown and ability to actually learn something from that big data, use something from that big data is, again, there's something there that's untapped. It might not be like Uber where there's an existing industry that needs to be disrupted, but big data itself and the ability to take this time next year there will be 50 million people wearing Apple Watches, or 30 million, whatever the number is. Tens of millions of people are going to be wearing Apple Watches next year. Apple is recording how often I'm standing up, how often I'm sitting down. And yes, there's privacy concerns. That's a different issue entirely. That goes back to our security and whatnot. But it's the combination of all of those people's data. You don't have to know the names or anything. But having 30 million data points of how often people stand, sit, walk, exercise is untapped. Who knows what to do with that? How do you break it down? Is it by time? Is it by person? Is it by sector? Is it by demographic? Is it by location, geography? All of the above. You got to do all that. You got to figure out everything you possibly can glean out of that tremendous amount of data that's being generated. There's value. There is something there. Twitter is ferociously, that's why they partnered with IBM more than any other reason, because Twitter has got so much data that it can't use. They don't even know what kind of data they've got. There's more data than they know. You've got 300 million people monthly putting up tweets. 140 characters. If you can figure out which tweets are bullish and which tweets are bearish, if you can parse sarcasm in bullish versus bearish tweets, if you can get through those types of barriers, big data is going to get you there, and you're going to have, just in trading alone, the company, Goldman Sachs, Oracle and other companies have approached Scudify to talk to us about our data gathering. We don't have the scale yet, but boy, if we got there, we're going to be collecting the most relevant financial trading data anybody would ever want. That data is already on Twitter. They just can't parse it. They don't know how to get to it. It's too big, it's too cumbersome. How do you tell what's sarcastic when people are bullish or bearish? And there are companies out there trying to figure out all of that right now. There are hedge funds that are using algorithms based on Twitter sentiment onto various stocks, or the SPY, or the market itself. And they're running their money. They're making trades based on that data, analysis of big data. But I don't think they have any edge yet. Give them 5 years, they're going to learn how to get that data and make it useful. Boy, this is hard, 2 hours. I'm parched. All right, this guy has asked less questions than that guy, so I'm going with this guy first. And was there someone back there? You've asked your questions. You're after this guy.
I use StockTwits, and they follow the
Sure, and same thing. StockTwits has more.
Like charting and everything.
Exactly. And that being said, I don't know how much data they're actually able to measure, because you don't know so many times. Oh, that apple was a great pick. Was that real? Was that bullish? Was that bearish?
I know they have tags, bullish or bearish.
Okay,
But
fair
you don't
enough.
know who's telling the truth.
Well, and I would assume if you're going to bother putting a bullish or bearish tag, you're probably going to tell the truth. But there are ways to refine the data, but I think that's sort of what my point is. This trend of stock twits, Twitter, Scutify, figuring out financial sentiment is untapped. But you take that and multiply it times 100 when you're talking about health or consumers or just, the problem with finance is it's always a niche market.
Right.
You know, 1 out of 10 people actually invest or trade, whereas 10 out of 10 people use messaging apps. So, but the data in messaging apps, I mean, how much data does WhatsApp have that they've never even thought of? Or Facebook itself, posts, how do you measure the data being generated by people writing their posts and thumbs ups and whatnot? Your turn.
Yes. Why do you like First Solar?
I was short alternative energy from 2010 when I left TV and got back in my fund till about 2012. And when A1 was, I was literally short A123. You remember that stock, a battery company? I was short, I might have been short First Solar for a while. I was short several solar companies. Those companies had survived, as someone noted earlier, fully on welfare. The businesses were funded by it, the tax subsidies, the factories, all of it. And it wasn't sustainable. And whereas Elon Musk has given himself a 5 or 10 year runway, those companies had 2 or 3 years worth of cash. And there was no way they were gonna magically turn that tide until they all started going bankrupt. And then, as always, if you can, that's why I wanted the car companies to go bankrupt, because then I could have invested in car companies. Because the second I saw those companies, when I saw A123 file for bankruptcy, I covered my shorts. I started covering all of my alternative energy shorts, and then I wrote a book in 2012 called, I think it was 50 Stocks for the Alternative Energy Revolution. And the whole point was, it's time to turn from bear to bull. But this is, when these companies went bankrupt, the business models became functional, because now their cost basis is low, it's enough, you can buy all those assets out of that other guy for 2 cents on the dollar, put it on First Solar's balance sheet. So going back to First Solar, they've got a huge book value, good cash balance, well-funded business, growing, alternative energy is finally here. I think solar itself is the best way to play the future of energy right now. I don't like wind as much because there's too many moving parts that can go wrong. Solar, just other than moving back and forth, tilting for the sun, you don't have moving parts. In general, I mean, yes, you get down and there's moving parts in every electric thing, but the point being, I think solar is a great investment, a revolution you want to be in front of, and
But
First
there
Solar
are
just
other
happens to be the one
companies.
I own.
Other companies,
Solar City,
Right.
I like the solar business. I just happen to own First Solar. I probably should own a basket if I really wanted to get serious about it. I should, like with the F5 Splunk and Palo Alto Networks being a basket, I probably should have a basket of solar stocks, but for whatever reason, I haven't done that personally yet. Yes,
Have you ever seen the solar generating plant outside Pring, Nevada?
I have not.
Oh,
It's
wow.
unbelievable, but just crazy.
But it's running under, it's not meeting estimates, so,
Huh.
yeah, they had to actually put in, I just read about it, they had to put gas there to heat up the water before the morning.
So we're now using
To get
old
up there.
electricity to generate new electricity. That's genius. But no, I haven't, but I've been to a lot of solar plants and done that type of stuff and toured the facilities and whatnot. It wasn't ready 10 years ago, but I think 2015, you gotta be invested in solar. I wouldn't wanna touch an actual energy, oil, gas stock to touch my life. I think you got 5 years to 10 years, maybe 20 years of a bear market in oil and energy. I think oil could see $20 a barrel at some point in the next 5 years. If we truly continue generating new solar energies and get a revolution in some sort of energy production.
You know, Google's offering different things. Is that a risk from a
Yes.
company perspective? I mean, they're diffusing their.
There's a risk not doing that too, though, because you stay search-centric and you end up Microsoft in 10 years with a business that, an entire industry that's passed you by. Facebook, same thing. I mean, the reason why it's a risk is twofold. You've got opportunity cost of the management's time and energy, and you've actually got the outright shareholder money that you're paying salaries, factories, products, research and development with. And as a shareholder, I watch that stuff. I've written before about how incredibly efficient Apple has always been with their R&D dollars. Google's not efficient with its R&D dollars. They've got too many hands and too many pies. Frankly, if Sergey and Larry ever leave, I'm out of Google. I don't think I'm in Google for anything but Android and Larry and Sergey. So at some point in the next 5 years, Android is probably going to be monetized and turned into something. I think it drives Google to $1,000 or $1,500 a share, and if they don't have another trick up their sleeve, or if Sergey and Larry aren't actively managing the company, I'll probably be fine. Yes, then I'll come back to you.
You know, exploring stocks, do you have faith in Jack Ma? You say you like to believe in the management. Do you think he's credible?
I don't, you know, when I've seen him talk, I haven't been thrilled, frankly. I can't fault the business he's built. I mean, that company is a juggernaut. He's built a $100 billion company. No, I'm not investing in a Chinese-based, Cayman Island-based sort of quasi-stock that you might sort of own equity in, the Chinese subsidiary of the Cayman-based island, Alibaba subsidiary of Alibaba. Not doing it. I'm staying away from Alibaba. Jack Ma specifically, because he didn't have to go to Cayman Islands or wherever. Is it Cayman Islands where they're actually?
Cayman.
Yeah, he didn't have to go register his company in Cayman Islands. So no, he could have just stayed in China, and I'd have a lot more faith in his company if he just embraced the laws and the standards and the taxes of the country he's based in. When you're going out there playing that whole tax hiding game that they all do, it's a red flag, especially if you're a startup. So, no, Jack Ma, I'm not a fan of. More of a fan of Jack Ma than I am of Elon Musk, and I'm more of a fan of Elon Musk than I am of Jamie Dimon. And
That's the pecking order.
I know that might be the pecking order. I don't know if I can go lower than Jamie Dimon. That's probably the bottom of the pecking order.
Warren Buffett.
He's slightly above Jamie
Goldman
Dimon, but
Sachs,
below
they go
Elon Musk.
lower.
Nobody's begged for more welfare in the last 10 years than Warren Buffett.
Do you like Howard Schultz?
Say again?
Howard Schultz? Do you think he's doing?
Howard Schultz, fan of Howard
Like,
Schultz.
you think he started global, you think?
Starbucks is, I worked, by the way, my first job in New York City was a Starbucks barista. And I still have a lot of affinity for Howard Schultz, who was the CEO at the time when I was working as a Starbucks barista. And when he came back, I truly didn't think he could change. Like, I thought Starbucks was as big and as valuable as it would ever get. And he came back and the stock's like doubled or tripled again. So, yeah, big fan of Howard Schultz. Yes.
Do you like Nike or Under Armour for wearables?
I like Under Armour better than Nike, only because of the growth trend, and you know Nike's been around for so long. But no, I don't think both. You could consider wearable plays because they are going to develop. They are developing and rolling out wearable measuring shirts that keeps data on how much you're sweating, and I just don't know that there's growth business. I don't know that changes where Nike's stock is going to go in the next 5 years or something. Nike's still just a great retail apparel sports company. Wearables, I don't think changes yet very much.
I think I'm gonna walk out of here with a good list and your phone number, but I'm not sure I can walk out of here and say, I think I'm gonna go find the next Apple.
Okay, so I'm glad you said that, because we've got here about 10 minutes, and let's bring this all back, okay? So, I don't have a name. If there's a name out there I think that could be right now, it would probably be Twitter. I think specifically that's the cheapest of my revolution high growth stocks. And that doesn't mean that, as you saw, I've got Twitter is on the lower half of my waiting. I mean, I don't have a huge position in Twitter yet. I plan to buy some more at some point. I'm just not in any rush. To find the next Facebook, Apple, and Google, here's really, I've hit on all these things today, and they're all in your notes. So number one, You gotta be willing to do what no one else will. You gotta be willing to buy what no one else wants to buy. You gotta be willing to shock your golf partner and say, I bought Sony, and someone in the crowd goes, why Sony? You've got to find trajectories and revolutions that aren't just growing. They're not just, changing an existing industry. Smartphones didn't change anything. They disrupted desktop computing, but desktop computing's still huge. Smartphones truly created the revolution, an entire revolution in society itself. So, if you can find a company that's truly creating you don't even necessarily have to start with the company. If you can find a trend that is revolutionary, in a societal way, not just in a technological way, but it revolutionizes how we communicate, how we interact with the internet, how we find data, that type of stuff. So you gotta find a truly revolutionary industry. You gotta be willing to find a company that no one is willing to buy yet. Everybody hated the Google IPO. And when I bought Facebook, it was after it crashed 30% after its IPO. So everybody hated it too. You find them when they're hated. You find them when they're in front of a huge revolutionary growth trend, and you have to be familiar enough with the trend, and you've got to understand that trend and where that company plays in it enough that you can handle the downtimes and be able to own the stock looking out 5, 10, 15, 20, forever. And that's it. I don't have a magic bullet. I work 90 hours a week like I have for 18 years. 19 years I've been working on Wall Street, and I've worked, I would guess, 80 to 120 hours a week. Every week I bothered showing up at work. Unless I'm on vacation, I'm doing this and trying to find the next Facebook, Apple, and Google. And if you want to do that, you can do it too. Is that about right? Did I help at all? Stimulate some ideas? Any last question? My man. What?
How about puts?
I buy puts sometimes.
No, I sell puts.
No, never sells. I've never sold an option in my life and never will. The minute I sell an option, the stock will go exactly the opposite way. And when you short sell something, what's your potential loss? Infinite. I'm never short selling an option. I might buy options.
No, you short, you sell a put at a lower price in order to buy that stock.
And if the stock goes to zero,
You
then
still buy it at that.
and I'm stuck buying it at that price. I'll never short sell an option. It's just not my strategy. I think retail investors have no business doing that. I mean, if you're not sitting there making a living trading options, don't be shorting stocks or options. I mean, don't short options if you're not doing it for a living. It's too hard. You'll lose too much in the slippage anyway. And yes, sir. Last question.
Are you offering discounts to those of us?
Why not? You guys want tradingwithcody.com. I've enjoyed the 2 hours. You're already paid. Go to tradingwithcody.com, sign up, and it costs you $99, but as you sign up, just when you get your receipt, forward it to support@tradingwithcody.com. Just send it to us and be like, I don't even need your receipt. If you sign up and pay, just tell them, hey, Cody said he'll give me my first month free, and if you don't like it after a month, you can cancel and no harm, no foul. So sure, I'll give you 1 month free of Trading with Cody and see how it goes. And go to Scutify and please download the Future app and send your mother a Mother's Day note for next year, since you probably missed it. That's why I said you missed it on Sunday, so you better get ready for next year. All right, guys, thanks so much.
Thank you.